post-holiday vibe. Volume was lighter, spreads were a bit wider in spots, and price action was mixed. NVIDIA pushed higher with real momentum, while several other megacap tech names either paused, chopped sideways, or pulled back slightly from recent highs. NVIDIA gave us the cleanest read of the day. Today, NVIDIA closed strongly higher $192.29 and printed what I would call a pivotal breakout. Here's why. Price pushed decisively above the recent consolidation zone, which was roughly $188 to $190. That's important, because when a stock spends time building a tight range and then breaks above the ceiling, that move often becomes the next directional trigger. Now add the second layer. Volume came in solid, at over 102 million shares traded. That matters, because a breakout on meaningful volume is telling you institutions are active. It's not just retail noise. It's not just a low volume pop. It's confirmation. So in simple terms, NVDA's line of least resistance has flipped upward. If this breakout holds, the next obvious magnet is the 52-week high at $212.19. That's the natural resistance area where you'd expect supply to show up, at least on the first test. Chart takeaway for NVIDIA. As long as price holds above that former range, roughly $188 to $190, the breakout thesis stays alive. Lose it, and you're back into the chop box. Now let's talk Tesla, because the tone here is different. Tesla is flashing danger signals and what looks like a distribution-style pullback after an extended run. Tesla recently tagged an all-time high at $498.83, but it failed to sustain that strength. Today we saw selling pressure, with the stock down 1.52%, and the low of the day was $473.82. This is the type of behavior you watch carefully after a major high. When a stock can't hold new highs and start closing weaker, it tells you the crowd is no longer aggressively bidding it up. In this condition, the line of least resistance shifts downward until proven otherwise. Here's the key level to watch. A major support reference is the mid-December low around $466.20. If Tesla breaks that level with acceleration, that's how you confirm a deeper downside move. If it holds and reclaims strength, then you could see another attempt higher. But right now, the chart is saying momentum has cooled and sellers are showing up. Chart takeaway for Tesla. Watch $466.20 as the line in the sand. Above it, you can stabilize. Below it, risk increases quickly. Micron is a different story. MU looks more like a normal correction inside a bull trend. MU has been coming off a powerful AI-driven move, and it recently hit a new high near $289.30. Today's dip was small, down 0.34%, and volume looked average, not panic-like. When a stock has a steep run and then drifts or dips slightly, that can be healthy. It's often just the market digesting gains. The key is whether MU can hold support. The nearest level to watch is around $275. As long as MU stays above that area, the broader structure remains bullish, especially since it's moving in sync with overall strength in semiconductors. Chart takeaway for MU. This looks like consolidation, not collapse, as long as $275 holds. Alphabet is basically in wait mode right now. Both Google and Google are drifting sideways inside a clear range, roughly $305 to $325. Today's moves were tiny. Google was down 0.11%. Google was down 0.18%. And volume was light. That combination usually signals indecision. No urgency from buyers, no panic from sellers. Just range behavior. In these conditions, chasing inside the middle of the box is usually low quality. What you want is the trigger. Two triggers matter. Trigger 1, a clean breakout above $328, which is the 52-week high area. Trigger 2, a breakdown below the lower support boundary. Until then, there's no major pivotal point firing. Chart takeaway for Alphabet. It's a range. Let price prove direction first. Apple is acting strong, but quietly. Apple was up 0.28% today, and it's trading near its 52-week high at $288.62. What stands out is that volume has been relatively low, even as price is near resistance. That can sometimes read like quiet accumulation, where stronger hands are holding and weaker hands are being shaken out yet. But the real signal comes from expansion. If Apple pushes through resistance near $285 with a clear burst of volume, that's the kind of confirmation that can trigger continuation. Until that happens, it's more of a coiled near-highs situation. Chart takeaway for Apple. Watch for a high-volume push above $285 as a continuation trigger. Boeing is still the laggard here. BA was down 0.84% today, and it remains far below its historical peak, which was over $446. Relative weakness matters. When a stock consistently underperforms while other areas lead, it tells you capital is not prioritizing it. Right now, BA's line of least resistance is downward, and buying pressure looks thin. Any small bounce can get absorbed quickly by sellers. Chart takeaway for BA. This is not where leadership is. The chart is still weak. Broader market rotation. TGT, FCX, NK. Now here's the part that matters beyond individual charts. We saw strength in some more value and cyclical names. Target, TGT up 2.12%. Freeport-McMoRan, FCX up 1.74%. Nike, NK up 0.97%. When you see multiple sister stocks across retail and materials moving together, that's a rotation clue. It suggests capital may be shifting out of the highest flying tech momentum and moving into value-oriented and cyclical exposure, especially as we approach the end of the year. That doesn't automatically mean tech is done, but it does mean you should pay attention to leadership changes, because rotations often show up before headlines catch up. Market takeaway. The tape is hinting at capital rotation as the year ends, with NVIDIA still leading, while other megacap tech names cool off or consolidate.